good morning, and welcome to Tax Talk Tuesday. I am your host, Chastity Grady. As I'm getting ready to get started with the live, I'm just going to take the opportunity, as well as I want you to take the opportunity to go ahead and share this live to some groups so that people can know that we're here, as well as we can get the people up this morning. Okay, let's get the people up this morning. It's a great Tuesday to be alive. So let's go ahead and get started. So, Tax Talk Tuesday. So, every Tuesday, as your host, I'll be coming on hosting a certain topic as relates to either taxes, finances, or business. And we're going to be here every Tuesday. 7 a.m. Central Standard Time. So every Tuesday at 7 a.m. Central Standard Time, we'll be on Facebook as well as TikTok. Now, we was on Instagram, but Instagram changed their live rules, and that's that. But we're here for sure on Facebook every Tuesday at 7 a.m. Central Standard Time. So, as your host, like I said, I'm going to bring a topic to you. I made a post the day before, so I'll make a post the day before reminding you, hey, show up for Text Talk Tuesday. And I gave you the topic. And today's topic, we're going to talk about the difference between a business expense and a tax deduction. Okay, that's going to be our topic today. The difference between a business expense and a tax deduction. So if you're new to me, I'm Chastity Grady. At Grady Tax Plus, it is our mission to make sure that we are keeping the IRS out of your pocket so that you can live a better life. Why? Because you deserve it, right? You deserve to live a better life. If you're a business owner, there's no reason why you shouldn't be living the life that you deserve. And one of the ways to help you live the life that you deserve is to making sure that the IRS is not on your back, that you can sleep good at night. You can fluff up your pillows knowing that you don't have to worry about the IRS. So that's why we are doing these tax talk Tuesdays, to give you tips, to give you tricks on how to make sure you're keeping the IRS out of your pocket. So again, on today, we are talking about the difference between business expenses and tax deductions. Okay, the difference between business expenses and tax deduction. So if you're new to me, make sure you're following me. I'm also streaming on TikTok. So as people are coming in and out on TikTok, you'll find myself repeating myself. So make sure you give me a follow. Make sure you give me a follow so you don't miss my videos, you don't miss my lives. I'm going live 3 times a week actually. But on Tuesdays, it's dedicated to the taxes. All right, so here we go. So first of all, let's define what a business expense is. We're going to go to the basics because sometimes we have to understand the basics before we can go ahead and flush it out, right? So, a business expense. The IRS considers a business expense something that is ordinary and necessary for you to produce income, for you to make money. And when it comes to being ordinary, when it comes to being necessary, this needs to be what's common in your industry. So, for example, I work with a lot of social workers and therapists. So, a social worker and therapist, they would not be able to write off buying hair supplies and flat irons and razors for cutting hair. They wouldn't be able to write off that because that's not ordinary. Other people who are ordinary in that business would not be able to write that off, right? So what's ordinary to your industry and what's necessary, what's helpful, what would be helpful, and what would you need in order to make the money, right? So that's the key things you want to keep in mind. Was it ordinary and necessary? Was it in alignment with your industry? And did you really need this to make money? So that's the formal definition of it. Now, when it comes to a tax deduction, now the tax deduction has to deal with the IRS. This has to do with what they will allow you to subtract from your income, right? These are things that they will allow you to subtract from your actual income, right? So when you've made your business expense, how much can you actually subtract from your income on the tax return? Okay? There's the difference. So, as you kind of see where I'm going with this, is that not all business expenses leads to being a 100% tax deduction. Not all business expenses leads to it being a 100% tax deductions. I'm going to give you 3 examples of them, okay? I'm going to give you 3 examples. The first example I'm going to give you are meals. So let's say you go to a business meeting, you go to a conference, whatever it is that requires you or you are needed to buy a meal, right? Because you can't, what you're gonna do, sit at the meeting and not eat and watch them eat, right? It was necessary for you to actually eat the meal because that's the whole point of the meeting that you had, right? To go and have lunch, to go and have dinner at the conference, to eat, right? What you're gonna do, be at a conference for 8 hours and not eat, right? So it was necessary for you to buy that meal. So that was a business expense. You swipe your business card, you get your receipt, and if you follow me, you know you need that receipt, okay? You get your receipt, and boom, that's your business expense. But on the flip side, we talked about the tax deduction. So if I spend $50 for this meal, is the $50 tax deductible? So that's where we look at, well, what does the IRS say about the tax deduction? Because yes, it's a business expense. I'm gonna swipe my card. I'm gonna pay the $50 with my business card. But on the IRS side, what the IRS says about meals is that it's only 50% deductible. So that means that yes, I spent $50 on that meal, which is a business expense. I'm allowed to swipe my business card. But when it comes to the tax return side, I'm only going to be able to deduct $25 of that, or 50% of the total amount that I've spent for the year. I'm only going to be able to write off 50% of that. That's the greatest example I have for you when it comes to business expenses versus deductions. Because sometimes we like to think that if I pay for this out of my business card, then I'm able to write off all of it, and that's not true. We have to look at, what is the IRS going to allow us? What is the IRS going to allow us to actually take as a deduction when we go to file our taxes? So if you're new to me on TikTok, double tap the screen, follow me so you don't miss any other Tax Talk Tuesdays that we do at 7 a.m. every week, Central Standard Time. All right, so that was number one, meals. I'm going to give you another example. A lot of people work from home. A lot of people have home offices, and sometimes people think that, well, if I'm working from home 100% of the time, then that means that I can now have my rent or my mortgage, my utilities. I can now have all of those expenses come out of my business account. And that is not true. Yes, you work from home 100% of the time. However, you are not using 100% of the space. There's a difference. Okay, you are not using 100% of the space. That's the difference. So what does that mean? So let's say if I am working from home, if I have a home office, then the things that I buy within my home office, my desk, my computer, printers, whatever, those are my business expenses. Those are the things that I can actually go ahead and swipe with my business card. I can swipe those things because that's within my home office. It's within the 100% space that I'm using within my total home. So if I put whatever I'm putting in my actual office space, those things are my business expenses. And for the most part, those things are going to be 100% deductible unless it reaches over a certain limit. So for example, if you spend over $2,500 on something, I don't know what you would spend over $2,500. Maybe you got a really good desk or maybe cabinetry or whatever it is. If that one item was over $2,500, then the IRS does not allow you to take 100% of that deduction unless you qualify for a section with what they call 179, where you can accelerate your depreciation. But generally speaking, the IRS will have you write off a portion of that for a number of years. Okay, so yes, your business might maybe swipe the whole let's say $2,600. Yes, maybe your business card swiped the whole $2,600, but on a tax return, you may not see that full $2,600 taken as a tax deduction all at once. You might only see a quarter of that. Sometimes it's 5 to 7 years depending on the item. So you would do that 2,600 divided by 7 years, and then that's what you will see every year on your tax return as a tax deduction. So this is kind of technical, but I need you to understand the logistics when it comes to business expenses versus deductions. Right? Because sometimes you might find, oh, I'm trying to reduce my tax balance. I'm trying to reduce how much I owe in taxes. So I'm going to go buy I'm going to buy this item for $5,000, not knowing that actually you might not be able to take that whole $5,000 as a write off. You probably only take 1,000 this year, 1,000 next year, and so forth and so forth. And so knowing this kind of information, that's actually going to help you make informed decisions moving forward in your business. Okay. So, back to the home office. So, number one, I said just because you're working from your home does not mean that you can write off 100% of your home, which means you can't deduct your mortgage, your rent, all of that. You can't take that as a business expense within your business account. You cannot. But the things that's within your office, you can. So what does it look? So what does that mean for me though? How do I actually write off a portion of my home? Because I had heard on Instagram or on TikTok or on Facebook that I can write off my rent, that I can write off my mortgage, I can write off my utilities. Well, you can, but you can do it on the tax return. And again, what does the IRS say about that deduction? What does the IRS say? How to take that deduction? It's only a portion. It's only a portion. And that's determined based off how much space you use for office divided by your total home space. So if that percentage is only 10%, then you can write off 10% on the tax return. You can write off 10% of your rent or your mortgage interest. If you have property taxes, any insurance for your rent or home, utilities, if you have security, pest control, all of those things, that can be written off at 10% of the cost, but that's going to be on the tax return. Okay, that's going to be on the tax return. Now, I'm going to give this disclaimer because oftentimes I have S corp people who are tuning into these lives and they think that, oh, what you're saying applies to me, and it does not. If you're an S corp, what I'm saying to you about the home office deduction does not apply to you because there's not even a spot on the S corp tax return to write off a home office deduction. That is on the Schedule C. So if you are not an S corp, if you are not a partnership, you will see on the Schedule C. That's where you can write off your home office deduction. And if you are an S corp, you need to get with your accounting professional or get with me to get an accountable plan. And that accountable plan will help us to determine how can you take that deduction as the shareholder of your company. Okay, it's different. So if you're an S corp, don't listen to me about the home office deduction. You do not get that. You need to establish an accountable plan, and I'll put a link in the chat on Facebook on how you can do that. All right, so moving on to number 3. If you have any questions as I'm going through these, please leave them in the comments section. I'll be happy to answer them for you. Thus far, we covered meals. We talked about how, yes, meals, if you are at a conference, if you're at a networking event, if you're at a business meeting, the meals that you deduct, yes, or that you purchase, yes, you can buy it with your business card. Yes, it's a business expense. However, on the tax return, it's not 100% tax deductible, only 50%. When it comes to the home office, the same thing applies. How, yes, within your home office space, so within my area that I'm operating my business, I can write off the things that I'm putting in here. I can write off my cabinetry, my storage bins, my desk, my laptops, monitors, books, whatever it is that I'm putting inside of my office to use for business. Those things are business expenses. However, when it comes to paying for my rent, paying for my mortgage, paying for utilities, or whatever applies to you, those things, those are still personal expenses. However, you want to keep track of those things. And I actually have a way for you to keep track of your home office utilities, your expenses, so that you know what you can deduct on your tax return. And for you on Facebook, because I am able to post links on Facebook, I'm not able to do that on TikTok. For you on Facebook, I will leave a home office organizer for you so that you can organize everything that's going on in the year so you don't have to worry about gathering that stuff later. If, for example, we're in the month of August, whatever you're paying for in the month of August, you can go ahead and put it on that organizer so you don't have to worry about trying to gather that information later on. Okay, so I'm going to leave that in the comments for you as soon as I end this live. And I'll start preparing to get that link actually for you while I'm on here. So, home office. You can only write a portion of the actual expenses of the home, and that will actually be on the tax return. You won't see that as a business expense within the business account. All right, so moving along, as I'm still getting this link. Moving along, I'm going to talk about the last item, which is a car. Okay, I'm going to talk about the last item, which is a car. If you're enjoying this video, if you are up with me at 7 a.m. Central Standard Time, please give me a like, give me some hearts so I know that you're here. Leave me a comment and say, yes, I'm here, I'm enjoying this live. Or if you're on the replay, hashtag replay. All right, so I got the home office organizer. I just pulled it up on Facebook, and guess what? It is only $9. So you get to have a peace of mind. You're able to organize your home office expenses, so you can gather your tax deduction for only $9, and you can use it over and over again. Every year you can use this. So one-time fee. All right, so I put that in the comments for you. All right, so here we go. The car. Give me 1 second. I'm also getting this accountable plan together. All right, and then also for you, if you're an S corp and you want to write off your home office, if you work primarily from home, you're 100% business tax. 100% your office space, or it's your principal place of business, you want to write off your home office, I'm going to be providing that accountable plan information for you in the chat as well. If you're an S corp and you want to write off your home office, establish your accountable plan here. All right, so I just put that in the comments for you on Facebook as well. All right, here we go. I'm trying to see, I have some comments, but I can't see all of them. All right, so here we go. Number 3, the car. Now, when it comes to the car, listen, the car, the auto and truck or car deduction, however you want to call it, it's one of the most complex. It can be one of the most complex business expenses, because oftentimes people don't understand how to track, how to keep up with writing off the car, with writing off the auto expenses, right? And when it comes to the car deduction, you have to be very careful with this, because there's some rules. I'm always going to make sure we're keeping the IRS out of our pockets. So I'm going to give you some rules on how to make sure that you are, quote, audit proofing this tax write-off. And so when it comes to the car, let's say you're using your car for business, you're traveling, you drive to see clients, whatever it is, and this car is your personal car. It's something that you use primarily personally. However, a portion of it you are using for business. Now, what the IRS says about this is that you want to make sure that you are keeping a mileage log. You want to make sure that you are keeping a mileage log. Now, there are a lot of free apps out there. There are a lot of free apps out there that you can use to track your mileage so that you can, streamline it a bit. So like Stride, STRIDE. Speaking of Stride, when I taught last week at the City of Austin small business trainings, there was a lady in the room whose brother actually created the app Stride, who actually created that. And I was like, oh, that's cool, because I had mentioned it in the class, and she like spoke up, because she was like, it was great to hear that, oh, her brother's business is getting around, right? So Stride is one, MileIQ. There, if you certain bookkeeping softwares like QuickBooks, they have a mileage tracker, so you can keep track of that as well. And so I'm putting in the comments on Facebook a free mileage tracker. It's a spreadsheet that you can use to track your mileage. So you want to track your going and your coming. You want to track when you left your office space to wherever you were going, and then if you return, you want to keep track of that for each trip that you take. It's called a trip. So for each trip that you take, you want to make sure that you're keeping track of that. Why? Because the IRS, if they were to audit you, they want to see that mileage log. They want to see that mileage log. You saying, oh, I think I had about 50 miles or about, 5,000 miles. That's not sufficient because where did you drive? Where did you go within that 50 miles or within that 500 miles, whatever it is that you're writing off? So that mileage log, that will have you being protected. That would protect you if the IRS were to say, you know what, I am questioning the amount that you put on this tax return. Let's see, where did you go? Where did you go? And the mileage log is going to tell you. Also, it's going to help you actually know the exact number to write off on a tax return. And as you can see, where I'm leaning towards most of the time when it comes to your car expenses, we are going to just be taking a tax deduction on the tax return by way of mileage. So you just keeping track of the mileage. That is going to be how you take that as a tax deduction on the tax return. Now, oftentimes you might find yourself, well, hey, I used my car for business, but I needed to get an oil change. I needed to get my engine changed. I needed to get a new transmission. Can I just write that off in the business? And the answer is no. Because even if let's say we are not using the mileage as the tax write-off, but you are using the business expenses, you still have to track the mileage because we need to know the percentage of the car that's used for business. So if you drove your car for 50, or not 50, let's do 5,000, for 5,000 miles for business, and then you had 10,000 for personal, well, we're gonna get the percentage out of that. We'll do the 5,000 divided by 15,000 total miles driven to see what your percentage is. And then based off that percentage on the tax return, we will write off 10%, 20%, 30%, whatever the percentage is of all the expenses that you've purchased or that you expensed out of your personal account in order to pay for these things. So yes, you want to track those things from on a personal level. You can also do that on a spreadsheet. If you get the free mileage tracker, just create another tab so you can keep track of all of the oil changes, gas, all of those things that you are purchasing so that you can write those off. Now, for me, in my experience, sometimes the mileage is a better option for people, and it's less work for so to speak, and it's easier to calculate when it comes to that deduction. And the mileage for 2025, the mileage cents to write off is 70 cents per mile. Like 70 cents per mile. What I found is that, so let's say, I'm going to give example because I like examples. If you drove 200 miles in a week and you multiply that by 70 cents, that's $140. That's $140. I doubt you spent $140 on mileage for the week just to drive 200 miles. So for the most part, the mileage is going to be the better deduction, but it does sound good. Oh, because my transmission was $4,000, so I'm going to write off that $4,000 on my tax return, and that's not how that works. If you can only write off 20% of your car expenses, then that's only $800. That's only $800. And if you have, let's say, for example, 5,000 miles that you've driven total for the year, that's a $3,500 tax deduction. So would you rather have, 800 plus or minus dollars written off or $3,500? Which one? I'm going to go with the $3,500. So when it comes to business expenses, however, there are times where let's say you are traveling for business. I have some clients who go from state to state. They might go from Texas to Colorado, back to Colorado, back to Texas, or they might drive wherever you're going. Maybe you drove to the conference, and so you had to pay for gas. You had to pay for those things. And what I do is, if I am specifically taking a business trip where I had to put gas in the car, then I will have it be a business expense for me, but I'm not writing off gas on my tax return. That's the difference. It may be a business expense for me on, in my bank account because I spent that $50, whatever gas, I actually pay for it out of my business account, but I'm not going to write off that amount on my tax return. I am going to take the mileage, which is why I still have to track the mileage, even if I do make business purchases when it comes to the car. All right. So I hope that makes sense. We talked about meals, we talked about home office, and we talked about car. Okay, how things can be a business expense, but on a tax return, 100% of it is not going to be deductible, only a portion. maybe it's 50%, maybe it's 10%, maybe it's 20%. It's only going to be a portion on the tax return, which is the difference. So something can be a business expense, but it might not be a 100% tax deduction, which is the difference. And you need to know the differences, because if you're counting on something, or if you're counting on being able to write off something, you need to know if you can write off 100% of that expense. Okay. I take a lot of meals. I go to a lot of network events, lunches, dinners, and all that, and I purchase a lot of meals. And so if I'm someone who wants to be conscious of, hey, if I spend $1,000 worth of meals in a year, am I going to be okay with only having $500 being a tax write-off? And for me, for the most part, it is okay, because if I am networking, if I am doing other things, then I am doing this to make money, so that $500 that I wasn't able to write off, I'm going to make that up either in the connections that I made, landing the client, or whatever it is. So that's another way to look at it. We talked about the home office, and we talked about the car. So if you have any questions about any of this that I talked about, definitely leave me a comment. Now, I want to transition for a second as I come to a close. When it comes to, because I talked about tracking your home office, tracking the car, and getting your receipts. I talked about all of that, which is a form of record keeping. The IRS calls this record keeping, and they require, and they have it on their website, that it's a must that you are keeping track of your income and your expenses. Why? Because this is how they determine what are we going to tax you on. How are we going to get our taxes, right? And so it's important and it's imperative that as a business owner, regardless to what stage that you are in business, that you are keeping track of your income and expenses. And I find that some people think that, oh, well, I'm not making this, I'm not making this amount in my company, or what if, I'll just wait till I start making six figures, or I'll just wait until I make this amount, or if I'll wait until I get full-time in business. And you will find that if you wait, you might find yourself being in the bind, because you don't know if the IRS is going to question something that you have on your tax return, and you're going to have to be ready. And you're going to have to be ready to produce what it is that they're requesting from you. And how are you going to produce this information? How are you going to produce it? You can't put estimates on your tax return. Oh, I think I bought about $500 in office expenses. I think I paid about $1,000 in advertising. That's not how that works. We need exact numbers. And so if you are on Facebook, in the comments, I did put your business finance tracker on there, so that you can be able to start tracking these things. And it's not enough to track. You also need to put the money where it goes. So if I spent, $500 on my website, I need to be able to assign it to my advertising budget. I need to be able to assign, if I paid for professional fees, to my legal and professional fees budget. Those are considered categories, and the finance tracker allows you to be able to track those things on a finance tracker for just $35. It's a one-time fee. I'm sorry, for $37. It's a one-time fee, and once you go ahead and purchase it, you will be able to see the video that I recorded showing you how to use it, and you will be able to be on track to being able to file your taxes on time. You will be able to file your taxes on time, so that if you need to buy a house, if you need to qualify for a car, or if you need to qualify to get your next place, you don't have to worry about trying to come up with this stuff later. It's already prepared. And if you are someone, I'm also getting the link for this. And if you are someone who actually wants to step up, you want to I don't want to say level up, but if you are someone who wants to go ahead and prepare your business for six figures and beyond, then you're going to want to get in the 90-day bookkeeping bootcamp. And we're enrolling for August. This is our last, this next week will be our last week enrolling for this program, where you can be able to go from the spreadsheet, if you're ready to move from the spreadsheet to the bookkeeping software, learning about the business expenses that we talked about today, learning how to make sure that what's a business expense, how does that translate into a tax write-off, so that you can properly estimate your taxes, right? Making sure you're staying ahead on your quarterly taxes, knowing what to pay in those quarterly taxes, how to pay, paying yourself, Oh my gosh, paying yourself, that's the number one strategy and my favorite strategy teaching in this program. And a lot of people love this because a lot of times we don't know what to pay ourselves. Yes, our business might be making a certain amount of money, but how much of that do we actually get to take home? How much of that do we actually get to put in our pockets? How much of that do we need to support ourselves? Paying ourselves without going broke is what I like to say. Paying yourself without bankrupting the business. That is something that I teach you how to strategically do that in the 90-day bookkeeping bootcamp. So you also get the opportunity to learn how to actually build your business savings. Now, personally, a lot of us don't have personal savings. Society research shows that most people do not have $1,000 saved in their personal bank account right now. And when it comes to the business, your business is an asset, and you want to make sure that your business looks like an asset on paper. You want to look like your business on paper. It's the best thing. It's the best thing smoking, right? So when it comes to business savings, you want to make sure you have that separate account, yes. But you also want to make sure that you have strategy behind putting money in the savings account. I just went through this yesterday with my client who's almost wrapping up her 90-day bookkeeping bootcamp. We have one more class to go for next week. And like I said, we're enrolling for August classes for you to start in August by the end of August. And yesterday I showed her how to strategically save money in her business to reach any savings goals. And listen, this is just purely savings. It has nothing to do with saving for taxes. It has nothing to do with, saving to invest somewhere else. This is specifically just for saving money in the business that you do not touch. I taught her how to change her mind, how to view money differently so that she doesn't even go in that savings. And all of that is the same thing that you can get within a 90-day bookkeeping bootcamp. And so if you're on Facebook, I am going to put that link in the chat for you to look at actually, let me put the website in the chat versus the link. That way, if you want to schedule a consultation with me to talk about it, you can. Okay, so I'm going to put that in the comments on Facebook to learn more about the. And again, if you're catching the replay, #replay. I'm okay with if you have any questions about the business expenses we talked about, the tax deductions we talked about. I'm okay with you leaving me a comment, and I will come back to it later. And if you are in the Facebook group, if you're watching this from my Facebook group, Social Workers and Therapists with Tax Questions, definitely actually, let me go to that group because I can't see comments on the StreamYard that I'm in. If you have any questions about any of business expenses that I talked about, any tax deductions that I talked about, definitely leave them in the group. So that I can answer those questions specifically for you. And if you are a social worker or a therapist and you are in business, join our Facebook group. Join the Facebook group. I'll put that in the comments for you as well. That's a group specifically for social workers and therapists with tax questions. So you can feel safe in your environment and asking your business, your tax, and your finance questions to get those answered. Okay. I think I covered everything in today's live. Thank you for tuning in. I will be back here next Tuesday for our Tax Talk Tuesday at 7 a.m. Central Standard Time. And like I said, join the Facebook group. I'll leave the link in my comments as well for you to join my email list so you can stay up to date on tax tips. I'm talking about the new big beautiful bill. If you want to know about what's inside of there, every week I am giving you an email letting you know to round it off for our end of the year tax planning Zoom that we are doing on December 18th. We have 99 spots. It's technically 100, but I'm the 100 spot. But we had 99 spots and we have about 30 or so left. So you're going to want to get into that Zoom for the end of the year tax planning Zoom so you can learn how to end the year right. Okay. So I gave you lots of resources In the comments, I gave you the home office organizer. I gave you the free mileage tracker, your business finance tracker if you want to use a spreadsheet, the 90-day bookkeeping bootcamp, as well as an accountable plan. If you are an S Corp and you want to write off your home office, I gave you the link for the accountable plan. And then I'm also going to post in the comments my Facebook group, Social Workers and Therapists with Tax Questions. So I hope y'all have a great start to your Tuesday. Hashtag replay again. If you are catching a replay, I will catch you here back next week, next Tuesday on August the 19th. All right, August the 19th. So if you have any questions, definitely leave them in the comments if you're catching a replay, and I'll see you next week.